Hello, and welcome to Daily Nexus Update Daily News Brief. Today is Friday, 5 June 2026. Today's briefing covers 5 stories across tech, finance, crypto, geopolitics. Let's get into it. First stop, tech. From microchips to macro consequences, tech never really does quiet mode. The European Commission is pushing for greater digital independence with a new tax on non-EU cloud providers. This proposal aims to reduce the continent's heavy reliance on foreign infrastructure by creating a financial incentive for companies to host data locally. It is a significant follow-up to our recent report on new cybersecurity standards for connected devices, as the bloc continues to tighten its grip on tech oversight. While the goal is to strengthen European digital autonomy, critics worry about potential impacts on service costs. This move complements the recent €10 billion investment package for AI infrastructure, signaling a broader strategy to build a self-reliant tech ecosystem. Officials hope these measures will secure Europe's place in the global digital landscape. Quick pivot from tech to finance. Time to check the markets, where charts can move faster than coffee cools. Eurozone inflation has officially hit the 2.1% target, a milestone that signals a major shift for the European Central Bank. Following our recent reports on changing consumer spending patterns and unexpected industrial growth, this new data from Eurostat suggests the economy is stabilizing. The bank previously hinted at a possible pause in interest rates, but this latest figure changes the conversation entirely. Markets are now buzzing with speculation about a potential rate cut as early as September. By lowering the cost of borrowing, the bank hopes to provide a much-needed boost to industrial expansion across the region. This development marks a significant turning point in the bank's long-term strategy to balance price stability with economic health, and investors are watching every move closely. The European Investment Bank is launching a €5 billion facility to overhaul cross-border rail networks across the continent. This move marks a significant shift in regional investment strategy, following our recent report on changing consumer spending patterns across the Eurozone. While previous funding rounds prioritized digital infrastructure and AI development, this new capital is strictly dedicated to green mobility. The goal is simple: modernize aging tracks and signaling systems to make rail travel more efficient for both passengers and freight. By improving these vital links, the bank aims to significantly lower carbon emissions in European logistics. This initiative represents a major push toward a more sustainable transport network. It serves as a clear commitment to long-term environmental goals while addressing the infrastructure gaps that currently hinder seamless international travel. Quick pivot from finance to crypto. Now to crypto, where volatility still treats calm as a temporary bug. Europe's financial watchdog, ESMA, has released new technical standards for crypto asset service providers, known as CASPs. This is a significant follow-up to our earlier reporting on stablecoin reserves and decentralized finance protocols under the MiTA framework. These latest rules focus on 2 main areas: cross-border passporting rights, and stronger investor protections, essentially ensuring that companies can operate across the European Union while keeping user funds safe. By standardizing these requirements, regulators are aiming to create a more predictable environment for both businesses and everyday investors. This move builds on the broader effort to bring clarity to the digital asset market, ensuring that as the industry evolves, the safety nets for European users remain robust, consistent, and legally sound across all member states. Quick pivot from crypto to geopolitics. Next, geopolitics, where every sentence has footnotes and consequences. The European Union and the United Kingdom have officially signed a new energy security pact to strengthen their power infrastructure. This agreement serves as a direct follow-up to the unified grid framework recently established by EU ministers. By focusing on cross-border interconnectors, the massive underwater cables that allow electricity to flow between nations, both sides aim to create a more resilient network across the North Sea. This shift is designed to stabilize volatile electricity prices for millions of households and businesses alike. While previous discussions often centered on trade deals, like the Mercosur Agreement or raw material partnerships with Norway, This move prioritizes immediate energy reliability. It marks a significant step in integrating regional power systems to ensure that energy can move efficiently wherever it is needed most. The headlines were moving so fast, even the refresh button asked for a break. If you want the next roundup, subscribe to Daily Nexus Update.